And just as we mentioned earlier, Japanese stocks closed higher for a 15th consecutive day, while other Asian shares wavered on Monday following a snap election in Japan on Sunday. The Nikkei 225 surged 1.11% to close at 21,696.65. Across the current trade, the Kospi was little changed, closing up 0.02% at 2,490.05, or down under. The S&P ASX 200 reversed early gains to close up 0.22% at 5,894. Hong Kong's Hang Seng declined 0.46%. Mainland markets closed a touch above the flat line as the Shanghai Composite edged up 0.11%, ending at 3,382.27, and the Shenzhen Composite climbed 0.61%, closing at 2,012.05. Well, let's take a break from the markets now. Saudi Aramco's plan to take a portion of its business public next year remains on track. Well, that's according to the oil giant's chief executive, Amin Nasser, in an interview with journalists at the weekend. Mr. Nasser's comments follow recent reports that the initial public offering for the world's largest energy company could be delayed into 2019 or shelved in favor of selling private shares to sovereign wealth funds. Saudi Aramco, the world's largest oil company, plans to list its shares on the domestic stock market and one or more foreign exchanges. But it's yet to choose the overseas market, fueling speculation about the kingdom's plans. The Financial Times reported last month that China was emerging as a front-runner in the possible plan to delay the IPO and sell shares to sovereign wealth funds. Bahrain, Kuwait and the United Arab Emirates have agreed to lift a ban on imports of Egyptian agricultural products as the country works to step up exports to narrow its budget deficit. The Egyptian Agriculture Ministry says the agreement came after a series of meetings and negotiations held between an Egyptian delegation and the Gulf countries. The three Gulf countries had banned various agricultural imports from Egypt, including pepper, lettuce and onion, earlier this year. The series of bans, which were said to have been on concerns over pesticide residues, came at a time where there was an increased appetite for Egyptian exports, resulting from a currency float that slashed the pound's value in half last year. Egypt has asked an agricultural quarantine body to advise on shipments and warned of exporters who violate agreed-upon international standards. Now, Spire Healthcare has rejected a £1.2 billion takeover from South African-based Mediclinic, sending its shares up 12% in early trade. Britain's second-largest healthcare company says the deal significantly undervalues the company and its prospects, and strongly advised shareholders to take no action in relation to the proposal. Spire, which is a member of the FTSE 250 index, operates in the UK, with operations stretching from South Africa to Switzerland and the United Arab Emirates. Mediclinic already owns 29.9% of the company. South African private healthcare providers, which also include life healthcare and death care, have been in a race to expand by making acquisitions in more developed markets as an antitrust inquiry has constrained growth at home. In the meantime, South African Finance Minister Malusi Gigaba may have to consider cutting spending, raising taxes and selling state assets to avoid further ratings downgrades. According to a Bloomberg report, the country faces a revenue gap of about $2.9 billion, and Gigaba is expected to outline policy changes in his first midterm budget speech on Wednesday. S&P Global Ratings and Fitch Ratings cut the nation's foreign currency debt to junk in April, after President Jacob Zuma appointed Gigaba to his post in place of the respected Pravin Gordhan. The maiden estimate of 16 economists shows the budget deficit for the current fiscal year is seen at 3.7% of gross domestic product, and that's more than 0.5% higher than the February budget's forecast. In the meantime, South Africa's Goldfields has announced a 3% increase in its third-quarter gold output, boosted by a 10% surge in production at the South Deep mine. Goldfields, which also operates in Australia and South America, saw gold production rising to 567,000 ounces for the quarter ended September the 30th. The miner's gold production for the quarter from its South Deep operations rose 10% to 81,000 ounces, driven by an increase in reef grade. Full-year production for its South Deep mine would be between 5% and 10% below the previous guidance of 315,000 ounces, as output has been affected by safety stoppages earlier this year following 2 fatalities. A look at Morocco's textile industry when Business Incorporated returns in a moment. Do you stay with us?